In this short video presentation, we're going to talk about the lock and walk strategy. I'm going to talk about performance first and then implementation. These are the summary statistics for lock and walk over the past year. These were calculated through the end of 2012. As we can see, over the last month of the year, lock and walk returned about 4%. Over a 3-month period, about 1%. So obviously, lock and walk had a good run at the end of the year. But over the past 12 months, ending in December of 2012, it did about 10%, and 3 years, about 58% combined. Most people would argue that these returns are great. Most people would be very happy with these type of returns. But the interesting part really comes in the data points below. The standard deviation over the past 3 years is only 3.92%. That's fabulous. The beta, this thing doesn't correlate to the market at all. If you wanted something that didn't correlate to the market but also offered performance, this would fit that bill. In addition, if you wanted something that would add a little alpha to the portfolio, lock and walk has done exactly that as well. Not only has performance been exceptional, not only is the standard deviation relatively small, and it's not correlated to the market, so market direction doesn't matter, but it's also adding significant alpha to the portfolio. I think this deserves careful attention, and everyone should consider lock and walk for a portion of their investment portfolio. This graph makes it easy to understand how lock and walk has fared since we began using it in January of 2009. The concept was that we should be able to lock in gains and walk away, and by doing that, have decent performance over time. When I started this strategy, the objective was to secure 1% from the trades that we made in a given day. What I found was that was a greedy number. Trying to secure 1% was actually pretty darn difficult and greedy. And when I back-tested the model, I found that there was a much better option. During the first year, in trying to secure about 1% a day, lock and walk took it on the chin. In fact, the strategy was down about 18% in the first year. Something had to change, and so I made a change. The change that I made switched my target lock amount from 1% to 0.67%. And in doing so, this strategy turned around remarkably. In January of 2010, I began using this adjusted lock amount, and since then, the lock and walk strategy has performed remarkably. But what happens when we compare it to the S&P 500? Now, over time, the S&P 500 is outpacing the lock and walk strategy by a little bit. However, when we change the date to the date in which I also changed the lock proportion of our strategy, we can see that the lock and walk strategy has far outpaced the market. In fact, compared to the S&P 500, the return of the lock and walk strategy is higher by more than 100%. Against the market, the lock and walk strategy has also performed extremely well. There are two ways to trade the lock and walk strategy. I will talk about both here, but first we'll talk about the manual method. The second way is to automate the strategy. The lock and walk strategy can be found in our Tradings tab under Lock and Walk. This is our Lock and Walk Alerts viewer. It is a rule-based strategy that incorporates support and resistance levels for the NASDAQ into a defined set of rules which trades QID and QLD, the ETFs for the NASDAQ, exclusively. This strategy is never short, but it does participate on the downside by buying short-based ETFs. That means it's okay for an IRA account. It also makes it very easy because we don't need to search out available short shares in the market. Instead, we just buy short when we short the market. We buy long when we buy the market, but we do it according to a set of rules. And those rules can be found in the tutorial. Please read the tutorial for details. In addition, look at the mode variant chart. The mode variant chart for this particular strategy is revealing because it tells us in each mode what exactly should have taken place. Please read the mode variant chart in the lock and walk strategy as well, because it's going to help you understand the modes that exist in the strategy at any given time. If you understand the rules that are in the tutorial and the modes, all of this will make complete sense. Although the alerts viewer will fire alerts notifying you that trades should have been made in the strategy, and although that is a very easy process to follow, the truth is some people do not want to do the work. Other people just don't have time. But a far greater number, for one reason or the other, just cannot seem to do it correctly. That is where Trend Tracker comes in. Trend Tracker is a revolutionary product. It is an automated trading system that will incorporate lock and walk. All you need to do is plug in the data points, click Activate. Trend Tracker knows the rules. Trend Tracker knows where risk controls need to be. Trend Tracker knows where to buy and where to sell. And Trend Tracker will do the work for you while you do other things. It will do the work for you so that you don't have the excuse of making a mistake from time to time. Trend Tracker will allow you to use lock and walk without sacrificing time or lifestyle. Since January 1st of 2010, when I made the change from a 1% lock rule to 0.67%, Trend Tracker has beaten the market handily. This is a rule-based strategy that works regardless of economic conditions, regardless of market direction, and regardless of any of the other noise variables that we may read in the headlines from day to day. This strategy has performed exceptionally well, and with the incorporation of Trend Tracker, it can be automated so that even those of us who do not want to take the time to manage risk can still incorporate this risk-controlled trading strategy into their portfolio. Please let us know if you have any questions about Lock and Walk and Trend Tracker.